Oh, Dan, good morning. I mean, given these futures markets, I know that overall you remain optimistic. But it seems like the market really does turn when we get a slight uptick in cases or a percentage jump or hospitalizations rise, or like this news out of Beijing about kind of a re-lockdown, albeit, in a small part of the city. But the market is really hinged on this health data.
Brian, everybody's been complaining that stock prices have been too high. Yet when we get stock prices dropping, everybody says, who wants those? Sure, this was never going to be a linear process on the way up. There's going to be setbacks along the way. I'm still very constructive. I don't think this changes my outlook at all on the economy or the markets. I think you're going to see a turn in the economy by the third quarter towards the upside. But we're right in the quarter where the data is going to be the worst. But again, that's the time when you want to be buying, because we're in the early phase of a new bull market. I'm very confident of. I don't see us returning to the old lows. And I believe the areas that you really want to focus on is the small cap stocks, because those are the stocks that you want to have when you're coming out and entering a new phase. Absolutely.
But they have been hit harder, at least have rebounded less than the overall market, Dan, as well, because they are domestic. If we see more virus fears here and the economy kind of people, step back a little bit from the reopening and say, okay, hold on a little bit here. Wouldn't the domestic companies get hurt worse?
Not necessarily. First of all, when you look at the Russell 2000, it's a lot of industrials, financials, in addition to healthcare and technology. When I was with you last, I talked about what's going to help us recover here is technology and healthcare. I firmly believe that that's going to be the two areas that are most important, because those are the solutions to the problem. We've had a forced adoption of technology as we are all working from home, and healthcare is where all the innovation is going to be. And we're seeing the largest expansion of healthcare as we look for cures and therapies. But beyond that, we're seeing very early signs of dramatic broadening out of the stock market. Chris Verone is seeing this in his technical work from Strategic Partners, and we're seeing it in our own work as many companies that were somewhat left for dead are starting to see some activity. And that breadth is a great early indicator for outperformance. I could definitely see between now and the end of the year, the Russell 2000 somewhat catching up to the S&P 500, because that's been happening over the last 6 or 7 weeks or so. But then in 2021, I could see the Russell being the leadership place to be. Remember, the Russell, unlike the S&P 500, its peak wasn't until what was the fourth quarter of 2018, not February of 2020 like the S&P 500. And there's a lot better valuation support within the Russell that doesn't exist in the S&P. So we've had almost a 2-year period where the Russell really hasn't participated at all. And it's time for those stocks to assert themselves. And I believe we'll see the Russell be the leadership area. We already have dollar weakening and credit spreads normalizing.